Hello, hello, everybody. Hope you all had a fantastic last day of trading in 2016. Another year in the books. It's amazing. So now we get to look forward to 2017 and what all is in store. But first, let's take a look at what's been happening in the markets so we can catch up. And we'll start with the TLT, which is in the top left-hand corner of your screen. And we can see this incredible dip that we've had over the last several months. We haven't had much of a bounce off of this bottom. We found this bottom around 117. Bounced, a couple points, but that's it. It does look that if we do get a significant bounce, the next level would be around 125. That's what I'm looking at for the next bounce back to be. And then if we look in our top right-hand corner, this is the dollar index. As you can see, we've talked about this many times, this huge increase over the last several months, especially October, November, and December. Large increase. We've pulled back a little bit over the last couple of days, but look, we're still above making higher lows. So we'll probably pull back to around this level. May sit here for a little bit, and then possibly move forward again, which of course we all know is not great for multinational companies that are diversified around the world, because when the dollar goes up, then our goods become more expensive and it's harder for people to buy them. So we'll have to keep taking a look at that as well. And that is sort of like a de facto rate increase as well to slow down the economy. So very interesting dollar movement. In the bottom left-hand corner of your screen, we have crude oil. And we were talking last time about this breakout and how it wasn't a great breakout. And that's exactly what happened, right? We were looking right here. The breakout wasn't very good. It wasn't a high-quality breakout. The volume wasn't there. The candlestick was not great. And we did see a pullback down to this $50 level. And we've come back up to around $54, but we still have been unable to break the peak of that breakout day. So we'll see if we're going to break that. It may have been a false breakout, or a lot of people are calling for movement in the energy sector and a continued increase in the price of oil, but it really doesn't look like there's much conviction to it to me. If it does keep moving, it doesn't look like it's going to be a very fast move nonetheless. And then last but certainly not least, we have the S&P 500 right here in your bottom right-hand corner of your screen. So this is a 3-year chart, and we can see the Trump rally here at the end here. So since the election, we've rallied a very significant amount, almost 200 points, so almost 10%, which is basically the entire year's movement. So we're up about 10% for the year, and most of it was in that one move. So if you had bought stocks on election day, you would have made basically the same thing that everybody else would have made if they had held the entire year. Now, the interesting thing about this is this pullback. So if you look at positioning right now versus last week and the week before, people in the know are positioning for a pullback. So people are looking for a 3 to 5% pullback at least, and it's pretty likely that we find that, especially with TLT or bonds having fallen so much and stocks gone up so fast, and the correlation between the two was so negative, which is one goes down, one goes up, right? So you very well may see a reversion to the mean. So we've gone a long ways. We definitely could get a pullback in January. And the January barometer, although it wasn't correct last year, if we do get a pullback, the January barometer would say that as goes January, so goes the year. But for now, what I really wanted to do was get to some strategies for you. So, wanted to talk about short-term and also long-term strategies. So, one of the short-term strategies I wanted to talk about was based on positioning, and positioning is light. Positioning has lightened up a lot in the last couple weeks. So, people that are in the know, big money movers, are expecting a pullback. So, I would not be a buyer today or say uh, first thing in the new year. I would wait for the pullback and then possibly start to buy. The other thing I wanted to talk to you about was sectors. So sectors are super interesting because if you follow momentum sectors, you can beat the market. It's really not that hard. If you buy sectors that have momentum with them, you can make a trade every month and you will beat the market. So the sectors that were momentum leaders this past month were XLE, which is energy, which is what we were just talking about. Energy was up 6.3% for the month of December. IYZ, which is telecom, was up 5.9% for the last month. And financials, of course. Everybody knows that financials have been on a tear because yields have been increasing. And when the yield curve steepens, that's when banks make their money, right? So those three sectors outperformed the other sectors in the S&P 500 by leaps and bounds. The rest were, less than a percent basically up, despite the 10% move over the last 2 months. So those three sectors are where you would go if you want to follow the momentum: XLE, IYZ, and XLF. Now, a word of caution for long-term investors. If you look at when you started investing and base your long-term performance on that, you will do far, far better if you invest your money in a low PE environment. So going into 2017, what's our long-term strategy? Not to buy. So basically, not to be in risk assets. So what we would want to do is keep our risk low in our portfolio until, as will happen at some point in the future, PEs will come back. Historically speaking, PEs after bull markets are down around the 10 or 12 region, and that's when long-term investors can start buying up stocks with both hands, because that's when you get your long-term performance of your portfolio. If you start investing, if you invest a lot of brand new money into an environment like this, you're going to get burned. You just will. Because this cyclically adjusted PE right now is at 24, and the average is 17. So you're way above average. So if you've got a ton of money on the sidelines, I wouldn't be dumping it all into the stock market especially just based on this last 2 months when we've rallied so much. The stock market investing is a long-term business. You don't want to lose all your money up front. So basically, just keep that in mind if you're a long-term investor and you're going to leave your money and park it there for the next 20 or 30 years. Because if you start now, your returns are not going to be very good on an annualized basis. So keep that in mind, definitely. Also regarding the business cycle. So if you look at the overall market cycle, typically, if you will hit a top of a market. When that happens, you'll see strength in the energy market, strength in the precious metals market, which we saw, right, last year. Part of last year, because the last half of last year, gold took a dive. So gold was strong. Energy, of course, oil and everything was way down. But since the lows last February, energy's been doing pretty well. So those things may indicate a top to this overall business cycle. And then sectors that indicate uh, an early bear market. So I don't think we're in an early bear market right now, obviously, because we're at all-time highs. But things to look out for. Healthcare and consumer non-cyclicals are generally the sectors that lead in an early bear market. So if you start to see those sectors take off, then I'd be very, very wary of where we are in the cycle. But interestingly enough, financials and transports usually dominate in an early bull market. So it's funny because we came out of this uh, late 2014, 2015 period where we had an earnings recession going into, February, March, especially, or last summer even. And people think that the earnings recession is improving starting this past fall. So if you look at the sectors that led through those times, it almost feels like we went through the sectors in a late bull market, and then we're almost rotating back into sectors that would indicate an early bull market. So it's very interesting. Um, One thing to keep in mind when we talk about this too is um, Elliott wave theory. So Elliott wave theory would suggest that we are in the fifth upward move, which would be the last upward move of an Elliott wave cycle. So after the fifth upward move, after the fifth move in an upward cycle, then you start a downward cycle, which has three sections. So the next fall that we have, the next significant fall anyway, may very well be the first bear market cycle of an Elliott wave cycle. So if this is the beginning of our fifth segment of our bear market, that could be conducive with financials and transports leading the way, and then we'll rotate through, in the next probably 1 year to 2 years back to healthcare and consumer non-cyclicals, and then enter our ultimate bear market, which probably will happen, right, in the next 2 to 3 years. We probably will have a pullback. We're already almost 8 years into this bull market, which is historically the second longest bull market ever, the longest being 9 years, back in the 80s and 90s, late 80s and 90s, leading all the way up to the tech bubble. But so right now, we may have some room to run to the upside, but in my view, this is limited. So the next move will be a bear market. That's my view of how things are going to pan out. Now, all of the incoming administration's policies to extend the bull market may definitely have some effect. I mean, everybody is very, very positive when they think about the policies that are going to be coming on and the decreased regulation and all of that. But at some point, we're going to have a bull market, and it's probably going to happen sooner rather than later. Like, I don't think that this bull market is going to run for another 5 years. I just don't think that's going to happen. But in the short term, it's very possible that we see some additional gains next year, at least for the first half of next year, and then we'll see what kind of policies get in and get passed, and then we'll make another effort to make our predictions next summer. But we'll see. So anyway, hopefully that helps you put 2017 in perspective, and we'll see how it all pans out. All right, you guys. Hope you all have a fantastic new year. Enjoy your holiday, and we'll see you in 2017. All right, have a good one. Bye-bye.